Well, good afternoon if you're on the East Coast. Late good morning if you're out on the Pacific. I'm Al Dominic, the CEO, Bank Director, and FinXTech. I'm coming to you from the home office in Washington, D.C. I've been out on the road quite a bunch these last few weeks, and while meeting people in person, it's given me some ideas for how to best tee up concepts like we're about to surface in this FinXTech digital series. So far this year, we've covered a number of topics and trends that I think show how and where banking and technology continues to come together to create new earnings opportunities, differentiate and diversify one's business, and really how to get your arms around buzzwords like optionality. So before we dive into this lending-focused conversation, allow me to share the following anecdote. It's one about rowing versus sailing, and I think it applies for all of us watching this exchange. So the story goes something like this. There were two men who needed to cross a vast sea. One asked, is it better for us to row or to sail? His counterpart, who was a little bit older than him, said, rowing will be quicker at first, but ultimately if we can align ourselves with the winds and the currents, sailing will be far faster and actually more enjoyable. So the moral of that story, at least as I think about it, is not to confuse motion with progress. And progress is really what we're all about with today's FinXTech exchange. And again, I want to thank everyone who's taken the time to join us, either presently or is watching this after the fact. We're doing this particular exchange with the help and support of four wonderful businesses. We've got Encino, Oak North, Velocity Solutions, and Tavant. I'm excited to introduce you to business leaders from each of them, but before I do, some very quick housekeeping details. First of all, you've joined this event in listen-only mode. So guess what? You're automatically muted. For a better viewing experience, we recommend that you click on the slide bar at the bottom of the screen to put the presenters into full screen mode. But again, that's your choice. We do encourage you to ask questions. You can note them however you'd like to yourself, but by clicking the Q&A button, you can really bring them over to us. I've also got a notepad here, so if I hear something, I'm going to be taking some opportunities to ask our presenters what their thoughts are. Now, as much as I'm taking detailed notes, there's really no reason that you have to. The recording will be available to all who signed up within 24 hours via email. It's also going to become available on the bankdirector.com website. If you have any technical issues, just note those using the moderator chat feature on the right-hand side of your screen, and we'll do our best to take care of it. On that note, let me introduce our speakers for today. And as I introduce them, I'm going to ask them to come on screen so you can really put a face with the name. The first one is Will Cameron, who's the Senior VP of Community and Regional Banking at Encino. I could talk a lot about Encino, but I think it's really meaningful to think about its bank operating system that works with more than 1,200 financial institutions to really help those organizations achieve revenue growth, greater efficiency, cost savings, and regulatory compliance. I just was out with Encino's CEO, Pierre Naudet, and congratulated him on a new engagement with Wells Fargo. This is a tech company that I think a lot of people have heard about over the last few years for good reason, and we're really delighted that Will is taking the time to join us today. Next to join us is Bryce Luger, an engineer at Oak North. Oak North is really just like another incredible technology company that has some interesting bank background. Oak North, for some of you, you might recognize them from their work in the UK and in Europe. What we're doing with Bryce's help is thinking about Oak North as the creator of the On Credit Intelligence Suite, which is a cloud software that really transforms commercial lending by helping banks to build deeper relationships with their clients. And since this whole exchange is about unlocking new opportunities and making smarter decisions, I think having Oak North here to talk about how do you lower risk and create new efficiencies is really, really nice. So Bryce, thanks for joining us today. Next one who's going to join is Scott McGregor, Regional Account Manager at Velocity Solutions. Velocity Solutions, I had no idea. It was founded in 1995. So, silly me, I was thinking it was, kind of early 2000s. But this is a company that has been servicing the transaction accounts of over 30 million consumers and businesses. They have exceptional expertise in using data and digitization to optimize revenue, risk, service for banks and credit unions alike. I've had a chance to talk with Scott in past webinars. I'm really happy that you could join us today. Final one, we've got Vibhay Sharma, who's the head of bank tech, the bank tech practice at Tavon, which is driving innovative solutions across all domains of the banking industry. He's at the very least going to represent, the great state of California. They're headquartered in Santa Clara. Tavon is a digital products and solutions company that provides impactful results to its customers across North America, Europe, and the Asia Pacific. So this is probably where I was confusing Scott's company. This was founded in 2000, taking power intelligence is by really trying to reimagine what the customer experience can look like. So together, these four gentlemen have just great perspective and insight on, not just what's happening now, but where this whole industry of ours might be heading. And I just want to say thanks to the four of you for doing this with me today. So let's dive right in. I think I might like to start with Will, because when we're thinking about the business of banking, it really comes back to this concept of relationships. And I'm curious, how is it that you and your colleagues think about banks creating lasting relationships? Everything has become so digital in nature, and there's just far fewer touch points with your potential customers.
Yeah, thanks, Al. Appreciate the opportunity to be with everybody and have some good conversation. It's true. There's fewer touch points, but I think the key is we have to make every touch point count. The reality is consumers' experiences with a financial institution's technology will directly impact how they feel about their overall relationship with that financial institution. So building a trusting relationship actually incorporates the technology that you provide your customers. We used to think of a trusting relationship as maybe between two people, like a community bank lender and his or her client. But the more and more we're seeing that only goes really so far. Customers interpret trust as how well a financial institution meets all of their expectations, not just that interaction with the lender. So even if they do have a good relationship with someone from the bank, the customer needs to be able to trust that your financial institution will provide convenience, speed, and security as well. But also don't think it's only about technology either. I mean, people are so important to this process. We just have to make sure that we're leveraging the technology to do what it does well, while also supplementing that with good personal relationships.
Yeah, I think that's a great way to kind of kick off this conversation. It actually allows me to go to Deepav and talk a little bit about what you're seeing as it relates to banks taking a more strategic approach to this growing ecosystem of fintechs and data aggregators. I'd like to address the lending evolution, but I think it can build off what Will was just talking about.
Yeah, in fact, this is very interesting, right? The dynamics are it's friend or a foe. When it initially started, the fintech started entering the space. The initial perception was, let's peg them as standalone disruptors. And the banks themselves would go on and compete with them, and then they start compete with on the technology, on the business models. And eventually, I think they've started to realize that, we can work together, and it can be a win-win situation. And that has sort of come around in the last 18 months. You can see the evolution. I mean, when the banks needed to get to the broader base, the digital adoption improved. They could basically look at, from a front-end perspective, the fintechs obviously focus on the ease of use, the ease of information access. And the banks have their own core systems. They have their own operations, which can provide that scale, support that, and the efficiencies. So together, they basically make for a broader business model. And interestingly, the initial, I think, the survey of this year basically said the banks, 95% of the financial institutions that were surveyed believe that, hey, we can grow our business if we partner with fintechs more. So it's definitely, I think that's the works that's sort of starting to pick up now.
I totally agree. And, anecdotally, I've had the opportunity to spend years, 11 years now, talking with bank executives, their boards, and leadership that's going through this period of change. about how, when, and why they want to engage with, outside companies to really move things forward. I don't think there's many examples. I'm just going to build everything on my own. So that build by partner, mindset really does, show up in a lot of different places. Bryce, I'm curious with Oak North. I don't know if I'm doing justice to how I describe what you're doing here in the U.S. because I know there's what happens in the U.K. and what happens in the U.S. and sometimes those are different. But you've got this great enterprise, software approach that banks like PNC and Capital One, I think Fifth Third, have already said, this makes a lot of sense, to use. What do banks get from partnering with you?
Yeah, no, that's a great question, and to a lot of the points that have been raised. And you generally think about the lending space in the United States, and there's this continual focus on data, right? What can we do with data? What folks are generally leveraging with Oak North are taking borrowers' financial data and all the available information regarding their sectors or their industries to actually provide early warning indicators, right? In the case of credit deterioration or kind of deterioration in the loan book itself. The way that we've seen folks view this, right, and even through the success in the UK, is taking a proactive, preventative action across the entire loan book as opposed to reactive approach, right, which is essentially getting ahead of borrower financial hardships, industry-driven risk deterioration, or in the case of covenants, right, potential breaches as opposed to actual breaches. What that ultimately rolls up into, right, is from our point of view, an independent third-party challenge to existing credit processes, right? Something that, at least from the customer's perspective, has said is really well received from the board, right? Other investors and regulators. So, leveraging that kind of data that we're capturing, right, just through the general dynamics of business, to benchmark borrower performance, monitor the sectors that are really critical to us from a commercial lending perspective, and ultimately enable banks to actually make data-driven credit decisions.
Yeah. Now, as you're talking about that, again, forgive me if I'm asking the question poorly or if I have my facts, kind of messed up, but I mentioned Fifth Third. I know that I'm fairly confident that Encino works with Fifth Third. I think Oak North does as well. So that puts you in a very complementary space as I would approach it. So if I put on a specific hat and I said, I'm going to run a bank and I want to understand, how it is that I'm not just using Encino, but I could be using an Oak North in a complementary fashion. So Will, how would you talk about Oak North? And then Bryce, how would you talk about Encino to make that case to me as the banker who doesn't know as much about the products and the strategy as you two would? Can I ask you that question?
Yeah, absolutely. So, I won't talk specifically to one customer, but just in general, you can't do everything, right? Your platform or your solution is going to be good at what you do, but how you interact and how you become part of more of an ecosystem is really important. And if someone thinks that they can just do it all without partnering or without understanding how financial institutions might be leveraging other solutions technology, then they're not going to survive in this environment.
Bryce?
Yeah, so I would absolutely agree with the spirit of that statement, and very specifically to your question, right? The solutions, the things, the processes that Encino enables, right, which is to speed things up, to gather data, to actually capture data and do an immense amount more. From our perspective, is bring that data to the table, and we can do something incredibly granular and forward-looking with it, right? As I think Will said, especially well. No one can do everything, right? So everyone trying to do the best of what they can provide is incredibly complementary.
Sure.
And if I could add one thing to that, I know everybody's focused on how they can create an integration strategy that aligns with that, so that they're not in an environment where they can only plug into one thing or with one partner, but we've got to be open to the fact that there's going to be a lot of us out there. And so building an integration strategy for that is critical.
Wonderful point. Wonderful. I wanted to ask Scott for his opinion. I'm going to kind of mentally pivot from what I was going to ask because, Velocity Solutions, again, has a long, rich history of doing some really interesting work. a few years ago, you acquired a company called Akuba.
Right.
And again, as I'm thinking about the conversation that we're starting to have about how do companies, not just serve a bank, but how do they, partner with each other? How does a company like Akuba exist? And actually, it would probably be helpful if you just tell me and tell our audience in a sentence or two, what is Akuba? And, as you're hearing this, like, where does your mind go?
Yeah. Hey, thanks, Al. So Akuba rhymes with scuba. Yeah, it's a really unique name, but a sentence or two. What it really is intended for is to enable online small business lending as well as perpetual lead generation for the C&I lending space. And I really liked the word that was used a moment ago around complementary. I think that really is really the hallmark of a technology like a Akuba or an Encino or an Oak North, where you're really trying to not only best of breed, but how they work in kind of in synergy with one another to really turbocharge a business and accelerate opportunities where they've been identified and those sorts of things. And so I think that's tremendous, and I would encourage everybody to really think deeply about, as Will stated, it's not one solution that's going to work for every bank across the entire enterprise. It's really, I think, what we're seeing is the evolution of these niche technologies that are really best in a narrowly defined swim lane, if you will. Fascinating stuff. Fascinating time to see the evolution of the technology here, particularly in the lending space.
I agree. I mentioned I've been fortunate after my Moderna shots to get out and see folks that are similarly vaccinated, and it struck me as one of the more interesting and unexpected comments that was kind of moved in an offhand way, but it's really like rattled around in my head, is that 50% of fintech companies really are just great marketing companies. And so when Will was talking about granularity, I think that is, such an interesting topic. And Viva, I'm curious, if we think about really personalizing or like hyper personalizing, what we're trying to do right now, technology allows you the ability to do that. But are there business benefits that you are starting to see and recognize with that concept of hyper personalization?
Yeah, absolutely. I think when you read the history of banking, it was about hyper-personalization, right? You read, when the people were sitting on the benches, that's where the word bank came from. They actually knew who they were giving money to, right? And so far we got away with some of the high-tech stuff that we did, and now I think it's coming back. Now you want to know, because of the digital access and the broader base of consumer, you basically want to know everything about them. And interestingly, you want to feel more secure once you are lending. And the business benefit, of course, is once you're onboarding a customer, I have enough information. Yes, I can do some of the risk assessments and I can do some of the experience stuff. But when I get on to my existing customers, how do I sort of pull them back, and I don't let them go Googling about, hey, how do I pick up a student loan? Because I should know that, hey, they are looking for a student loan because guess what? I know they have a kid who's about to go to college, right? So let me start sending out some mailers, reach out to them, start on that note. Even in lending, when you create credit facilities, do you just want to create a certain number-based rate and benchmark-based risk score, or do you really want to give them options? We spoke about optionality, right? So be a single point entry and give them options. Look, I know this is where you're heading. This is where you want to be in aspirational credit facility. Let me say it's just an extension of customers' aspirations and their behavior. So. Yes, I think the consumers, with the adoption of digital technology, they have basically, obviously they've been ruined from an experience perspective, or they've been spoiled by likes of Netflix and Amazon. So they expect the same service from banks, and we'll have to compete on that front.
Yeah, I think I'll say that we've all been spoiled with the experiences that others have created in either adjacent or just totally different industries. But your point about data is so spot on. For years, banks have been the canary in the coal mine, and the sense that they've been able to really anticipate economic shifts. You can look at employment trends. You can look at where people were investing or pulling back. And I think again with the amount of information that we now have and the sophistication of the technologies that are available, you can take that and go even further down into the individual consumer. If you want, you can look at small and mid-sized businesses, which for many who signed up for this, that's the lifeblood of their bank's business. Scott, I'm curious, when we start talking about specific metrics that people measure or target markets that you want to address, how do you and how does the team approach a conversation like that with a bank? Because they should know their customer to a point, and you have some things that can help advance that forward. Can you talk about those two different points?
Yeah, you bet. So, it's usually at the initial engagement with a partnership between Velocity or Akuba and a client. It's really a sit down and roll up your sleeves and collaboratively look at two different opportunities with regard to the online small business lending. One, it's those that are already, those borrowers or potential borrowers actually that have a depository relationship with the bank already, but for some reason don't borrow from the bank. And so there's a really untapped opportunity there. Oftentimes what we'll find is that small businesses will say, hey, it's because of the bank's lack of technology and an antiquated lending process that's very cumbersome and takes tons of time to get a reply back on my application for credit. So therefore, I tend to, as a small business borrower, go to a FinTech. And so it's a technology like Akuba that enables a bank to be able to provide that kind of capability, much like a FinTech as we originally had conceived of FinTechs. And then there's an opportunity for targeted messaging and outreach on behalf of the financial institution to small businesses within their MSA. That's most often accomplished by looking at the very specific industry types, oftentimes by some assumptions around credit quality and that sort of thing that banks want to lend to. And then it's a simple matter of a call to action messaging to those small businesses with an encouragement to visit the client bank website to apply for credit and those sorts of things.
Sure.
Yeah.
Well, Bryce, maybe you can pick up on Scott's observation in terms of some of the more common challenges that you hear when it comes to, how does commercial focus, how can the software help me address some of the challenges that we're dealing with as a bank?
Yeah, so the last 18 to 24 months have been pretty telling, right? And I think everyone is aware of that. One of the very first things that we saw at the onset of the pandemic was a concept that we lovingly coined event-based re-underwriting, right? Which you would commonly think of as scenario analysis, right? Due to external events. COVID was a great example in the sense that it happened. A lot of folks are presently evaluating climate change, right? Things that are going to happen, guidance that will be given, regulations that will occur. But one of the things that we saw was, the traditional approach to commercial lending is we've got historical data, right? We're doing annual reviews. We're making assumptions based on really broad-based performances of industries that, at a sector level could literally have hundreds of sub-industries rolling up to them that are not really driven by the same things. And that approach isn't inherently fit for purpose any longer. So the ability that we saw in being able to combine historic data with a forward-looking view, re-underwriting on an ongoing basis and taking a very granular approach specific to the subsector in which an institution is lending, that was one of them. Another thing is really related, right? Which is that annual review process. Again, every bank we talk to does it, right? I think we all know that. But it's resource intensive. It takes away time from relationship managers who could be spending more times, I think, as Will said very effectively, giving that personal touch, right? Giving time to the borrower, right? Whereby our analysts, the folks that are in the credit department, they're going to do underwriting at the initial phase when we're trying to create a credit facility. But once we go through the credit cycle, right, having to re-underwrite that as if it's a brand new deal year in, year out, to prove a lot of what we already know, 85+% of the time, this is a great credit and it will perform until it pays down, right? That is something where software can meet the challenge, right? Supporting banks today in the tracking process, who needs documents? Where are the documents? When can we get the documents? Or do we have tech that enables us to gather them? Particularly when we combine that with underwriting, right? The underwriting component, if we are leveraging early warning indicators, forward-looking views of the credit in the particular industry, we automate away as many things as we possibly can. That kind of renders things like the annual review less necessary, right? It's a lot more of a regulatory exercise as opposed to a real value-added exercise for the bank and their clients, respectively.
Sure.
I think the real last thing is talent, right? In a lot of markets, it's talent starved. And how do you combat that besides getting into a bidding war for people? What we had found through really leveraging data and the same types of views that we had discussed as it pertained to event-based underwriting and automating away as much of a review as we possibly can was leveraging said information to hire generalists as opposed to really high-priced specialists, right? If we know maybe inherently that we have a couple different sectors that we would like to approach, what can we do to approach them mindfully to see how that performance plays out over time? Those are just a few of the things that the last 18 months have brought to light for our clients.
I think it's helpful. And again, the reason we do these 45-minute videos is to surface some concepts that might seem obvious to one person, but they could be brand new to somebody else. So I want to keep coming back to some of the things that we're noticing and the trends that we're paying attention to, because if we can all share our wisdom with one another, I think it benefits and kind of lifts all boats. So I want to take what Bryce just said. I want to bring it over to you, Will. Simple terms. What do you see as being the biggest trend in commercial banking for 2022?
Yeah, I think, specifically for commercial banking, I see a big opportunity in improving speed and risk through credit automation. Bryce was just kind of hinting on it. I think that's something that a lot of people are focused on this year. As you get outside of the more retail and small business loans where people are really focused on automation and decisioning and that kind of thing, if we're talking specifically about commercial, I think the real opportunity is the credit automation. When you can use technology and you're able to automate manual tasks, things like spreading financial statements or tax returns, and giving decision makers better data to make the right credit decisions, that's powerful. And there's a lot of opportunity right now in this space to do that. When a lender can have tools to be able to kind of be out in the field, make calculations around pricing and profitability scenarios with their customers, they're looking at different options while also making sure that they're meeting profitability hurdles. That's a powerful conversation to have with good technology that can do the automation of the calculations and take out some of that manual data entry.
So would it be fair to think about those technologies being more like machine learning or the artificial intelligence that can help augment the existing team as opposed to replacing the team? How do you create that real business value?
Yeah, absolutely. AI and ML are involved in those things holistically as we talk about credit and risk automation and using data to help you make good decisions. The decisioning engines, financial institutions can make very fast credit decisions that are based on their credit policy. That creates a better customer experience and gets the money into their hands faster while also reducing the number of touches that the financial institution has to apply to those. So whether you're talking about smaller, retail and small business loans that I hear all the time in meeting with various financial institutions. Sometimes it takes as many touches with those as it does the larger commercial transactions. And so, they become unprofitable. But if you have the machine learning, the artificial intelligence to build in some of that decisioning and automation, then it can really make those loans more profitable and create a better customer relationship.
So I'm not sure if I should ask him to raise their hand. Maybe I'll just pick on that because I've done this and I did this before to him. Again, I want to go back and pretend like I'm running a bank, not bank director, but I'm actually in a community bank that aspires to bring in something new. I need to understand how am I going to frame the whole process from getting contracts in to proving that this is going, when I implement, how long is that going to take? Probably the most important is, how do I recoup my investment in something that I'm not currently doing? You make that specific to Akuba if you want to use that as kind of like the example that we use, if a bank was to bring Akuba in, or you can just take it in a more, holistic sense of how can I strategically consider my options?
Yeah. I think with anything like this, the jumping off point is certainly around. So, what does a shared vision of success look like? What is the vision in the end? And then you kind of work back from there to put together an action plan to get to a shared vision of what success looks like. Oftentimes, I'll ask the question of that of clients at the very outset of or a potential client at the outset of a conversation. And it's really through a collaborative exchange of what we know as best practices and what their hope and desire is and need of a technology, particularly in the small business lending space. And then you get down to the real specifics around. So if you have a vision for what success looks like, so what are the key metrics that you're going to use to determine your path toward that successful end of a realized vision of, as Will well stated, it's technology that allows bankers to make a more rapid but a more fully informed credit decision around a small business, in our case, a small business loan application instantaneously with respect to the client's requirements to lend. So in each case, it's very specific for each institution. So I think it's absolutely fascinating that it's technology that affords an institution the opportunity to preserve their credit and lending policies that can be specific to particular loan products that they have, and it's technology that enables you to very quickly. I like to say there's only three eventual outcomes. It either meets, exceeds, or falls short of the criteria. So when you begin to understand what technology affords you the opportunity to do, for me, it's super interesting to see how a vision for a future use of a technology like Akuba begins to really blossom for a client. So, yeah.
Are you finding that on the people side, Bryce was right to talk about the challenge of finding talented people, that fintechs can potentially help bridge that gap on the front end by saying, look, we have a team. Like a bank is not a technology company. It doesn't have a bench of talent. Very few that I've found have people that are just kind of sitting there waiting for this next project to come. You go in again as a tech company and say, like, we have these opportunities. What would be the appropriate approach that a tech company would say, hey, in addition to the tools, we also have some of the talent that can help get this thing started? Does that make any sense to you? I see Will nodding his head, so maybe I'll take it off of Scott. So Will, if you're okay with that.
Yeah, absolutely. I mean, I think it may have been mentioned earlier, but the ability to use best practices of all the implementations that we've done and what we've experienced. The folks on this call have access to a lot of various financial institutions that do things different ways. And then when we take our solution and implement it, we have the best practices of all the people that use our system. So we know how to use it best. So they don't need to feel like, they're starting from scratch. We're coming in with recommendations and best practices and then shifting, a little left or right where we need to. And a part of that supplementing the implementation efforts with just change management, because change is hard no matter if it's for the better. And so being able to provide some resources that can really help them think through a plan of talking with their employees and getting everybody excited about the benefits that are coming.
So I know so at Tavon, you've got customers all over the world. So I'm kind of curious if you have any experience from, other like kind of niche spaces that have been handled already that we could learn a little bit about. So if I was talking about digitization and lending and maybe like the high net worth space, has that been cost effective? Has it delivered operational efficiencies? Be above this is for you to answer if you're comfortable with that.
Oh, no, I'm absolutely comfortable. We do have some of the private banking clients, so and I'll sort of share what we have seen in that. It's very interesting, right, this space, because you think about why do they need digitization now, right? I mean, relationship managers deal with their private banking clients traditionally, and they don't want to share that. They want to keep them, one-on-one in person. But if you look at some of the data, 55% of in early 2000s were using digital channels. Now it's a whopping close to 90% are using digital channels. And it's not just one. Almost 85 to 90% of them have 3+ different tablet, phone, or other devices. And these are high net worth individuals. If they feel like, even using Alexa, you basically have to figure out how to use Alexa for some of their investments. So there is this growing trend that, yes, first of all, there's a demand for digitization from the high net worth individuals. And the second piece of this is that from what you want to essentially cater to high net worth individuals in terms of giving them the accurate information, processing, the times. So when you onboard customers, typically on corporations or high net worth could be corporations as well. If it takes 40 days, there's time to revenue that's being lost. They're just sitting there. So how do I essentially capture all that information, put into effect, bring it together, and assess their ability to essentially, their financial wellness, and then offer them those solutions? And the advent of what we spoke about, I think, it was mentioned, using AI and looking at large data sets that can help them, is basically saying, yes, apply that and give them that experience, because eventually they will, if you don't give them, somebody will, and they will eventually end up there. And it's, really a big loss for you.
So as you're talking, it strikes me, there's almost this, this tension of corporate strategy and business strategy, as it could be related. You don't want to have your customers continually upload information during the onboarding process. That should be streamlined. But then you also have to make investments on, areas that are emerging that your customers may not know they care about or even want right now.
Right.
Can you talk a little bit, just again, high level, because I know we're going to go into a peer exchange, but you've got to think on the systems, thinker, like everything is so interconnected that if you make a decision here, it's going to have some unintended consequence if you haven't played that out. How do you model, from a business sense, what can be done, not necessarily what is being done?
Right. I think that's a good point, right? So the whole idea is you create this identity, and an identity of an individual or an institution is made up of multiple dimensions. It's first of all who they are, and then their financial, their assets and liabilities information, then their financial health, their behavior, their reputation. All that needs to be factored in. And you can then basically process that, and people are driving that through models to essentially predict a lot of these things and connect from a perspective of saying, let's not take them through 8 departments handling manually, somebody's onboarding. Let's create an exchange and a standard model of reference so that if somebody needs to refer to that, yes, I know who this person is. And tomorrow, if they want to get into take margin loans or loans associated with some FX transactions, I don't need to go back to them and say, hey, listen, can you give me more information about what transactions you did in last 5 years? Well, I should be already building that because it'll save me time, it'll give a better experience to the customer, and necessarily I can segment that information into various domains and share that. Now, the other thing is I can federate the consent process. So if I wanted somebody to share that information, and maybe in open banking it's more relevant, and we will see it, its adoption in US at some point as well, saying, okay, I need your consent. Can I share this information because I feel that you wanted to do this transaction with this person? And they said, okay, fine, go ahead. You don't need to ask them again about this information.
Yeah. So we've only got a few minutes left, and I feel like I've got so many more questions I'd like to ask. I wish I could be in all of the different peer exchanges that are about to take place. Let me bring this to Will real fast because I'm curious, again, just to hear your thoughts on the number of institutions you work with. They have all different types of ambition. They have different leadership styles, but one common thread is like making money in banking is hard. And there is pressure, especially in the economic environment that we're going towards, to potentially freeze budgets or find places to cut costs. Nobody really likes to talk about it. I know that I'm always seen as an optimist on like how everything's going to be, but I think we've got to be realistic. There are pressures being applied, and I'm curious how financial institutions can really stand out in that type of environment where people are starting to cut costs, where they are saying, hey, a budget, it's going to stay here. It can't go any further. Any takeaways?
Yeah, absolutely. So, first you got to make sure that if you do have to cut costs, you're cutting the right costs. Not all costs are equal, and I think there's some that hurt but are doable for a time, and then there's some that I think have the potential to make your financial institution irrelevant in a short amount of time. And so deciding what those are and figuring that out, making sure you have a good plan of doing what you have to do, but also continuing to move the ball down the field in the ways that you can, so that you're still a part of the conversation and you're still attractive to your customer base. There are plenty of micro transformational projects that you can do without large, long-term implementations, a lot of money. There's things you can do quickly that can create a lot of efficiency, and that really depends on maybe what solution or software the financial institutions are on at the time of this. I know for the ones that are already on systems that are configurable, they can still continue to make little tweaks along the way that add value to the entire process and take some of the tension off the budget constraints. But we're installing things like auto spreading for a lot of customers, and it's not a long implementation, and it creates an enormous efficiency by just not having to rekey all those financial statements. So that's one example. You got to keep moving the ball down the field. And I do get to meet with a lot of financial institutions, kind of in various parts of the country, and it does amaze me how much some banks don't know about their own processes. So we'll get key stakeholders in a room from each functional area of a bank so that we can talk about how to improve various parts of the process. And it never fails that one group doesn't know what the other group is doing, and they don't realize that they're creating inefficiencies there, that they're having to rekey, again, 3, 4, 5 times in the process. And so those types of things, banks don't have to have a large budget to spend walking through that process flow, whether it's loan origination, account opening, whatever it might be. So there's always those things you can do to get smart about how your financial institution operates so that you can make the right investments into the technology to improve them.
I think you just kind of gave us a great, springboard to move into the peer exchanges. Actually, all four you have. I want to thank Deepav, Will, Bryce, and Scott for your time here with us, really with me. Just as housekeeping, everyone's going to get a recorded version of this webinar within 24 hours. As I said, it's going to be posted on bankdirector.com. but we've just started to scratch the surface on a lot of things that I think people care about. You know, Bryce, you were talking about environmental issues and climate change. I mean, that's a major issue right there. You know, think about the potential of partnerships and how technology companies can come in and work collaboratively with other tech companies. You know, that integration approach, the granularity. I mean, these are really important topics that, you know, I'm glad we start. And as we move into the peer exchanges, they might be things you want to continue on. Again, these peer exchanges that we're going to break to now are exclusive to our bank attendees. If you previously indicated you'd be joining the exchanges, we've broken you into small groups with unique links sent to you on September 28th. If you need to search your email, you're going to look either for September 28th or you're going to look for my colleague Nicole Smith. She sent you the actual email. It's nsmith@bankdirector.com. That went out on the morning of September 28th. That has a special link that you can click to join your peer exchange group. That's going to start right now. Again, I am Al Dominic. I really appreciate people taking a little time with all 5 of us today. Gentlemen, appreciate your perspectives, and really I hope that we're able to do this either digitally or in person again very soon. So thanks so much.
Thank you.
Thank you.
Bye, everyone.
Thank you as well.